Welcome to Tax Breaks. I'm your host, Kelly Phillips Erb. I'm a senior writer with Forbes, and you might have seen me on the web as Tax Girl. I'm also a tax attorney, and I work with tax professionals and taxpayers like you every day. There's a lot to talk about, so let's get started. This week, we're talking about disappearing IRS documents, plus tax refund checks, new tax-related scams, IRS job offer rescissions, federal estate taxes, tax filing deadlines, industry updates, and more. As a kid, I loved the idea of disappearing ink. I remember dipping a small paintbrush into lemon juice and writing very, very important messages to my friends. As the ink dried, it was no longer readable unless you had the top secret key, heating the paper up to make the letters reappear. Don't tell my mom, but without matches, the plan involved holding the paper close to an old school light bulb to make the lemon juice turn brown. It's a pretty fun trick when you're a kid, but having the text of important documents disappear when you're a grown-up, that's less exciting and more concerning. And yet, that's precisely what happened to many tax professionals this week. Sections of the IRS's Internal Revenue Manual were taken offline, some as users were reading them. The Internal Revenue Manual details how the agency works and is a blueprint not only for IRS employees, but also tax professionals. The manual provisions aren't laws and aren't intended to be treated as such. They do, however, provide insight into how IRS agents and officers may regard a certain tax matter or criteria in an exam, audit, or collections action. The missing pages, which were first flagged on social media, were removed as part of a review to ensure that the manual complies with President Trump's January 22nd executive order, which, among other things, terminates diversity, equity, and inclusion, or DEI, discrimination in the federal workplace and federal contracting and spending. Predictably, pages related to DEI are missing, and sections focused on human resources and language initiatives were also taken down. However, some pages that no longer appear online, like those related to offers and compromise, don't appear to fit that description. That's because the method used to comply quickly, a word search for certain terms, flagged a broader set of content, according to a source. The search was needed because the manual is massive, and because the order applies not only to the manual, but to web pages, forms, and other IRS documents. The IRS is referring to the missing sections as simply under review. So far, however, there's no public target date for any of the material to be reposted. Unfortunately, unlike my childhood trick, holding your laptop up to a light bulb will not make it reappear. Last week, I reported that Trump also issued an executive order freezing hiring for most federal agencies. I noted that the freeze is intended to be temporary, except for the IRS. With respect to the tax agency, the hiring freeze will remain in place until the Secretary of the Treasury, in consultation with the Office of Management and Budget, or OMB, and DOGE, determine that it is in the national interest to lift the freeze. DOGE, you'll recall, is the effort headed up by Elon Musk, the world's richest man, the initial stand for the Department of Government Efficiency. According to the official IRS jobs website, candidates with offers with a start date on or before February 8, 2025, will be allowed to proceed with the onboarding process. But those with a start date after February 8, 2025, or an unconfirmed start date, will have their offers revoked. Job postings on usajobs.gov and similar websites have also been removed. Several of those impacted by the freeze have posted messages on social media, including law professors trying to find jobs for students who are now out of luck. But many aren't talking to the press, fearful of reprisals. As for those existing IRS workers, last week, Trump suggested he might fire IRS employees or send them to the border. When asked for comment, former IRS Commissioner Chuck Rettig, who was appointed in Trump's first term, issued a lengthy statement to Forbes, noting, among other things, that every type of hiring freeze has an impact, and this will be no different. Of those who interact with the IRS, the vast majority do so in an effort to be in compliance with their filing and payment responsibilities. As such, to the extent possible, the IRS is likely to continue shifting important human resources away from enforcement and into taxpayer services and overall operations support. IRS employees care deeply about the country and will not abandon their mission. Of course, all of this happened during the first full week of tax season, when tax professionals were busy fielding questions, including when to expect Forms W-2 and Forms 1099. For most taxpayers, these forms should have been in hand by January 31st, 2025. But if yours didn't show up, you may need to go online or make a few phone calls. The wild week, and maybe some wishful thinking, created confusion among taxpayers about whether they still needed to file 1040s and pay their taxes. I can report with certainty, yes, you must still file. The IRS is open for business. Of course, now that the tax season is open, scammers hope that distracted taxpayers will click on malicious links or provide personal information that can be used to steal their identities. One version of these scams is a text message advising taxpayers that they may be eligible to receive a $1,400 economic impact payment if they click on a link and provide their information. As with many scams, the message contains a kernel of truth, enough to entice taxpayers to click. It's true that the IRS recently indicated that over 1 million eligible taxpayers may have failed to claim the recovery rebate credit on their 2021 tax returns. And it is true that the agency is taking steps to mail out these payments, which vary but are a maximum of $1,400 per individual. That bit of truth is enough to get some normally careful taxpayers to click on the link in the text. Don't do it. If you are a truly eligible recipient, the IRS will automatically pay you. Now let's answer a taxpayer question. This week, a reader asked, I know the IRS holds your refund when you claim the earned income tax credit, but when can I expect mine? Here's my answer. The IRS expects to issue most refunds in less than 21 days, assuming you file electronically, rely on direct deposit, and have no issues with your return. Anecdotally, I'm hearing that refunds are hitting bank accounts fairly quickly this season. That said, you're right that the IRS holds some tax refunds. As a result of the 2015 Protecting Americans from Tax Hikes Act, often just called the PATH Act, the IRS must wait until February 15 to issue refunds to taxpayers who claimed the Earned Income Tax Credit, or EITC, or the Additional Child Tax Credit, ACTC. The extra time allows the IRS to match forms on their end with information reported by taxpayers, all in an effort to prevent fraud. This year, the IRS expects EITC and ACTC related refunds to be available in taxpayer bank accounts or on debit cards by March 3rd. Some taxpayers could see their refunds a few days earlier, but that estimate is based on processing times and allows for President's Day, which is a federal and bank holiday. If you claim EITC or ACTC, you can track your refund status using the Where's My Refund app or tool on the IRS website. You should expect to see an update on or around February 22nd. And remember that your refund will be issued in one piece. The IRS isn't allowed to release the part of the refund that is not associated with the EITC or ACTC early. If you have a tax question or matter that you think we should cover in the next episode, please let us know. You can find more info in the show notes. Of course, if you follow me on Forbes, you know that I love looking at statistics and enjoy a good chart or map. This week, I'm focusing on types of federal income tax returns filed with the IRS. We know that the IRS expects to receive 140 million individual federal income tax returns by tax day, April 15, 2025. An additional 20 million or so, including those filed on extension, like mine, or simply filed late, will be filed by the end of the year. But do you ever wonder how those numbers stack up with other income tax returns filed with the IRS? The IRS processed almost 271.5 million federal tax returns and supplemental documents in fiscal year 2023. Of those, about 179 million were income tax returns, the lion's share of which were filed by individuals. S-Corps came in a very, very distant second, with just under 6 million returns filed, followed by partnership, estate and trust returns, and C corporations in that order. How does that translate into dollars? Individual income tax payments, including those made through withholding, totaled almost $2.6 trillion before refunds in fiscal year 2023. By comparison, the IRS collected just $457 billion in income taxes before refunds from businesses. In other words, individuals paid almost 5 times as much as businesses in income taxes. Speaking of statistics, it's time for a little tax trivia. The prospects of an audit may be scary, but the data suggests that your odds of being chosen are slim. According to the most recent IRS data book, the average IRS audit rate is 0.44% of individual tax returns, or about 1 out of every 227 people. That means that you are more likely to do which of the following than be audited by the IRS. Your choices are A, fund a 4-leaf clover, B, die from a bee, hornet, or wasp sting, C, win a prize in Powerball, or D, get struck by lightning. I'll give you a minute. The answer is C. You're more likely to win a Powerball prize than be audited by the IRS. Your odds of winning a prize in Powerball are 1 in 25, or about 4%, although the odds of winning the big prize, the jackpot, are 1 in 292.2 million. Compare that to your chances of finding a 4-leaf clover, which are 1 in every 10,000 clovers, or your chances of dying from a bee, hornet, or wasp sting, which are 1 in 59,507. Your chances of being struck by lightning in any given year are 1 in 1.2 million. Now it's time for a deeper dive. This time, it's a look at federal estate taxes. Benjamin Franklin famously said, "In this world, nothing is certain except death and taxes." Ironically, he died 5 months later. The federal estate tax combines both of these things. It's a tax on the right to transfer property at your death, but with the federal estate tax exemption climbing to $13,990,000 per person, or $27,980,000 per married couple in 2025, very few estates are subject to the tax. According to estimates from the Tax Policy Center, just over 7,100 estate tax returns are expected to be filed for taxpayers who died in 2023, and just 4,000 of those estates would owe tax. Bottom line, just 0.2%, that's a fifth of 1%, of deaths in 2023 will result in federal estate taxes. One reason, other than the obvious dollars, that few people pay federal estate tax is estate planning. There are legitimate planning techniques that allow families to pass wealth to the next generation while avoiding or reducing the federal estate tax owed. One of those is a qualifying terminal interest property, or Q-tip trust. A Q-tip trust allows a surviving spouse to receive income from the trust's assets during their lifetime, with the principal or remainder of the trust passing to other designated beneficiaries, such as children or other family members, after the surviving spouse's death. It has uses outside of taxes too, including for couples who each have children from another marriage, since it allows the first spouse to die to provide for the surviving spouse throughout the remainder of the survivor's life, while also identifying the separate children as beneficiaries after the second spouse's death. For estate tax purposes, when the first spouse passes away, the assets transfer into a Q-tip trust would qualify for the marital deduction. This means that a surviving spouse does not have to pay federal income taxes on assets that pass to them, instead deferring tax until the death of the surviving spouse. Without a Q-tip trust, if the deceased spouse's gross estate were to exceed the available estate tax exclusion, the deceased spouse's estate could be subject to estate tax on death. The marital deduction doesn't typically apply to non-citizen surviving spouses. Enter the Qualified Domestic Trust, or QDOT. The QDOT rules allow a decedent to leave assets to their non-citizen spouse without triggering estate taxes at death. Instead, the tax is deferred until the surviving spouse's death. To qualify, assets must be held in trust for the benefit of the surviving spouse, with the U.S. citizen or corporation serving as trustee. The balance of the trust must be included in the non-citizen spouse's estate at death. This arrangement solves the problem that Congress envisioned, where non-citizen spouses take the money from the first spouse's death and flee to their native country without ever being subject to U.S. estate taxes. And as U.S. policies on immigration tighten, the focus on limiting benefits for non-citizens is likely to intensify. The government's efforts to curb immigration benefits could extend to estate planning techniques like the QDOT. If lawmakers target these kinds of trusts, or even the ability to pass assets tax-free to a non-citizen spouse, individuals may need to act quickly. Foreign individuals with U.S. property may also be subject to the U.S. estate tax. Fortunately, estate tax treaties aim to minimize double taxation, a common issue when two jurisdictions claim taxing rights over a decedent's assets. The United States has negotiated estate and gift tax treaties with 14 countries, but a quick caveat: these agreements vary significantly in scope and applicability. So does all of the recent focus on the estate tax mean that it's a goner? While it's on a House GOP wish list for elimination, there are some practical and political challenges. Under current law, eliminating the estate tax would result in a loss of revenue. Repealing the tax without offsetting those revenue gains would likely violate the Byrd Rule. Remember reconciliation? Public opinion has generally been divided on the issue, making repeal of the estate tax less likely. Recent comments from GOP congressional leaders reflect uncertainty on the appropriate timing of a federal tax reform bill. Fun fact: the estate tax has been repealed in one form or another 4 times, most recently a 1-year reprieve in 2010 as part of the Bush-era tax cuts. The estate tax returned from the dead in 2011 with an exemption of $5 million, indexed for inflation. Now for something a little more brief, some quick tax and accounting newsmakers. Carolyn Ann Tavenner, age 74, of Fort Worth, Texas, passed away on January 27, 2025. In the 1980s, Tavenner was known as the mother of the 1040EZ, which she led in developing. She continued to serve the IRS for 5 decades, including as the project director for the Tax Reform Implementation Office. During her career, she was the recipient of 5 Commissioner Awards and 2 Presidential Rank Awards. I had the honor to sit next to Tavenner at an IRS luncheon some years ago. At the time, the IRS Commissioner was John Koskinen, who honored Tavenner at the luncheon. And his comments all these years later still feel timely. He emphasized that Tavenner's career was illustrative of the nonpartisan aspect of the work that the IRS does, saying, "While presidential administrations come and go, our employees are still here, serving the American taxpayer and keeping our tax system running." And that's a wrap. Thanks to all of you who watched, commented on, or shared the first episode of the show. Next week, we'll have more information on scams, including one so outrageous that it was made into a docuseries. I'll also catch you up on what I'm doing to get ready for Alaska. Spoiler alert, I'm trying out dehydrated food. I'd love to know what you thought of this episode. You can send an email with your feedback to curb@Forbes, that's KERB, @Forbes.com. And if you liked it, please share. You can find a link to the audio of each show on Forbes.com. Thanks for listening, because paying taxes is painful, but hearing about them shouldn't have to be.